Good Monday morning, Market Chameleons. Everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Demetri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. These shows, all of our shows, are for informational purposes only concerning Market Chameleon tools and products. If you are on YouTube, remember to like us, share, follow, all that good stuff. With that, good Monday morning, D.
Good morning, Will. How are you?
Good.
Good morning, everyone. I'm going to share my screen here so we could jump right to it. And today what we'll cover is a tool that helps us visualize implied volatility levels of a group of stocks that we want to analyze.
Hey, D,
And yes,
when we got a question about implied volatility at the start, do you want to save it to the end or do you want to?
yeah, what's the question?
The question is, Will, would you please ask Demetri to talk about how implied volatility can apply to making a selection on whether an option may be a buy or a sell? Also, if earnings make an IV crush into a specific strategy. I don't know if we want to make those webinars coming up or whatever, but that was the question around IV.
Yeah, no, thank you for the question. I think that it's a little bit outside the scope of what we're going to be covering today. So, not to get off topic, I'll just cover those questions on a different day or different show. We'll just make a note of it and we'll go over those questions because each one of them is, probably worth just concentrating on them on its own. So let's just cover that on a different day.
Yeah, we got the earnings season coming up, so maybe a good topic prior to that.
Yeah.
Perfect.
Okay. Yep. Thanks. Well, let me first show you where you could find this tool because I get that question. So if you go up to the main menu and click on options, you'll see this menu and come over here to the right. It says volatility compare under tools. Click on that and it will bring you to this page. And then you'll have this tool. And here, what we'll see is it does default to a group of stocks to start analyzing, but you could change that and you could create your own group of stocks that you want to analyze. And here we'll see that this group of stocks is the Dow Jones. So it's looking at the ETF, DIA, Dow Jones ETF. It's retrieving those symbols, the holdings in DIA, which is Dow Jones 30. And then it creates this visual representation of the implied volatility levels of each stock. And then it gives us the chance to actually compare the implied volatilities of these stocks relative to each other and also relative to this baseline that we created, which is a relative value. Now, and we're going to be able to answer a few different questions that are important as traders. We want to know what's going on, and we want to know with implied volatility levels in the stocks that we trade or we might be analyzing or interested in opportunities. And we want to be able to really quickly make a relative value analysis. And when we talk about relative value, a lot of people who start trading think of, just buying or selling something in anticipation of it, going up or going down. But if you've been trading and creating models and know how to manage risk, a lot of your trades will start to revolve around relative values. You're looking at one thing versus another thing that has that are similar, and you're looking for these divergences. So think of like if you're a real estate investor, something that I make comparisons, something that people could relate to. If you're a real estate investor, you make a lot of relative value comparisons, right? Like, what is this property uh, priced at or value versus this property? And if you're carrying an asset, right? Let's say you're buying something with anticipation of renting it out. Well, you're going to compare what is my borrow rate, my mortgage, my payments, my cost of carry versus my lending. What can I rent it out for? So you're making a relative comparison. What is my cost of carry versus or my borrowing versus my lending? Is there a spread there? And how far is the spread? Did it diverge enough that it makes sense to take on this risk and make this investment? And relative value trading is a big part of trading, investing, and risk analysis, and portfolio management. Now, here, what we're doing is let's just see what this first default screen is showing us and what we can learn from it. So we know that we have stocks that are all in the Dow Jones 30. So they belong to that group, right? The largest Dow Jones 30 stocks. We could see the symbols here. So, Cisco, McDonald's, NVIDIA all the way up here. And we have this baseline. So this long line. And this is the 30-day implied volatility from the previous day. So we're comparing the implied volatility, the most current implied volatility, to where the implied volatility closed the previous day. And this allows us to see the change, right? What did the implied volatility do from the previous day to today, just like a stock change? And that will tell us, if the implied volatility is going up or down on the day. And we could look at it as a group to see, are they all going up? Are they all going down? Are there certain ones that are diverging? Or are some of them starting to go down and more of them are going down, and maybe some of the other ones are lagging and they might come down, being pulled with the rest of them? Or are they all going up and some of them are lagging and maybe an opportunity to buy because they'll get pulled up with the rest of them? So this gives us a quick visual. So, we're not going one by one, to see what's going on. What the hell's going on around here? Like, what are people doing? How are they trading? So here, this baseline, this blue line, that's the implied volatility levels from the previous day. And then you have, like, for example, here, NVIDIA, it's below the line. So you'll see it in red color. The implied volatility declined on the day, right? So if we hover over, we could see it, but we do have a table down here. So if we wanted to I'm going to sort by, let me see, this is the price. Let's do the implied volatility level. So you see NVIDIA, 46 implied volatility, down 2.2%. That's what this is showing us over here. And we could see most of them were in the red. A couple of them did increase a bit. You got 3M, McDonald's increased, one over here. So some of them have increased on the day. Maybe that's worth taking a look at. Why? Maybe there's news. Maybe there's expectations of something coming up, like an event that we should know about. But they did increase on the day, while the other ones decreased. And here we don't, for the most part, we see that the changes, look close to where the previous day's close were. So they look, at least visually, nothing sticks out where there was a big change from one day, from one day to the next. so they look like relatively small changes. Another thing we see is the relative implied volatilities versus each other. What is the stock with the highest implied volatility? Well, here we see NVIDIA. That's the highest implied volatility in this group of stocks. What is the stock with the lowest implied volatility? That's over here, I think. What is that? Coca-Cola, right? Where are the implied volatilities clustered around? So it looks like maybe around here in the 20, mid 20 range. All this we could quickly visualize once we understand what the graph is and we come to it. Boom, we're on there and we see it right away, right? What's going on? So that's the change on the day. What about on a relative basis? If we wanted to see where's the implied volatility level relative to its average, right? We see how much it changed on a day, but has any of them diverged far away from their average? Because even though Coca-Cola implied volatility is the lowest in this group, but relative to itself, it could be high, right? Because maybe it really trades, usually much lower, right? Like 12, let's say. And even though NVIDIA in this group is trading at the highest implied volatility, maybe relative to itself, though, that's low. Maybe it usually is like 60, and now it's 40. So on a relative basis, they still, could look much different relative to itself. And, and from that perspective, NVIDIA could look low while Coca-Cola could actually look like it's high. So let's change this baseline and let's look at the implied volatility of the 52-week average. So we're going to draw the 52. I'm going to hit this reload. This line is going to change. It's going to show us the 52-week average implied volatility to where they are now and how far away they are. Reload. So here we go. Now this graph looks a little bit different. And you could see here that even though NVIDIA over here at a 40 volatility, somewhere around 40 volatility, if we looked at its implied volatility over the last 52 weeks, you can see it's trading below it, so it's somewhat a little bit below its 52-week average. Compared to itself, it's not that high. Usually because it trades at a higher volatility than all these other stocks, right? But we could see some of these other stocks that are trading at a lower volatility here than NVIDIA are trading above their 52-week average. So relative to themselves, now we're seeing a different picture. Here, even, IBM is trading pretty far away from its, 34 volatility versus 20. Now, it could be because earnings are coming up or something, but now we're getting a different picture. You could see once I changed it to a relative value, it looks a lot different all of a sudden. So the one at the very high end is trading below its 52-week average. Its 52-week average implied volatility is 48. Right now it's trading 45. What about, here's Procter & Gamble. Its implied volatility is 19.9, but its 52-week average is 14.1. So on a relative basis, now we're seeing it's trading at a higher implied volatility. What if we wanted to change that baseline and get a little bit more insights, right? Let's say, okay, that's its 52-week average. But let's compare the current implied volatility to the most recent realized volatility. maybe in the last 20 days, the volatility, the actual volatility of the stock is high, and that's why it's higher. So let's look at the last 20 days actual volatility of the stock versus the implied volatility, which is the market's anticipation of the next volatility going forward in the next month. So I'm going to change this to the 20-day historical vol. Let's see what that looks like. So I'm going to reload this. And so the baseline here now is telling us something different. We have to understand what we're looking at. We're looking at the implied volatility, which is the volatility going, the market's volatility anticipation going forward versus that stock's most recent history. So some of them are below, like, Home Depot, Walmart, they're close to the line, but they're below. Some of them are above. So NVIDIA here, even though we looked at it from a couple perspectives, it's the implied volatility is trading below its 52-week average. But if we looked at the last 20 days, maybe it's justified because the last 20 days, the volatility, realized volatility is trading even lower than its current implied vol. Okay. On the other end of the spectrum here, we see that Procter & Gamble, it's trading at a 19.9 volatility, but in the last 20 days, the stock volatility traded at 15.2. So this also looks like, that the markets are anticipating, or at least pricing in, that volatility in the next month is going to look higher than it has in the last 20 days. Okay. We could still change this baseline and go a little bit further and say, what about its longer term volatility? The 20 days, it's the most recent history, but we could smooth out that volatility because it could have bumps up or down. And if we thought that it would look closer to its longer term volatility, realized volatility, we could go to the 52-week historical vol. So this is comparing. So the first one, we compared the implied volatility versus implied volatility, right? Current implied volatility versus the average implied volatility. Now we're going to compare the implied volatility versus realized volatility, what the stock's actual volatility. Okay, that's the historical vol. Let's click on that, reload. And now we see that a good portion of them are trading above its longer term realized vol, because these are all in the green, right? All these are in the green. They're trading above their 52-week realized vol. A couple of them, Cisco, Home Depot, CRM, NVIDIA, look lower. And you guys could look up, this is just a visual, but a lot of these strategies, dispersion strategies, pairs trades, all this, these are things people compare. Or if you're looking to see if the rest, a lot of times, some of them lag, right? Or they're laggards behind the market, where maybe, there's demand building up for implied volatility and some of them might lag. That's also something to look for sometimes, where a lot of them just keep the demand for, let's say, volatility is increasing, and these other ones may be lagging. But you'd have to do more research because there might be something going on with earnings as well. So that's the long term. Now let's see from the extreme levels. What if we wanted to look at the extreme levels and say, how far away is the implied volatility, current implied volatility, from its high in the last 52 weeks? Right? Are we close to the highest level we've seen? Are we far away from it? Are there any extreme? Maybe there's certain ones that even popped a little bit above it on the day, because it's comparing today's versus the previous days, right? So let's see, 52-week high. Now we're looking at for anything that's near its high. Reload that. So they're all below, but we could see here NVIDIA is far away from its high, right? A high of 88 versus 45. So you could see that big space there between the blue line and where it is now. Some of them are getting close, though. We got, let me see, maybe Johnson and Johnson at a 19.5. It's getting close to its 52-week high of 21.4. So you could see a couple of them are getting close to that line. What about the 52-week low? Are any of them near its 52-week low, where, the volatility got crushed and looks like, whoa, it's way lower than all the other ones. Let's see if that's happening anywhere. So I'm going to take the implied volatility and let me see the 52-week low line and how close each one is relative to its 52-week low. Okay. Reload. And we see that, none of them are on the line. They're all above. Maybe the closest one would be like maybe Cisco. It's currently at a 16.9 vol versus a low for the year 14. So that one probably, is closer to the low, maybe CRM. So you could see that those would be approaching closer to the low end of its 52-week range. And we could see all that on this graph. And the idea is that if these stocks all have something in common, they're all part of the Dow Jones, and they're in a similar group. There are traders that are trading them versus each other, and there's an index of them that they have some kind of correlation or relative value. But we could create our own group too. So that's the Dow Jones. If we wanted to switch it, and let's say we wanted to look at a sector in S&P 500, let's say the technology sector, right? Let's see the technology sector in S&P 500. Let's reload that. So these are, you could see Intel, all the Cisco's in here. So there's a lot more. This group is a lot more, so it's harder to see. We could go to the table here, but if we wanted just to hover over and see like a couple of them are near its 52-week low. If we wanted to see, again, how far away they are from its just historical average value, click on that. And here we see, Dell is below its 52-week, 36 versus 47. NVIDIA is below its 52-week. SMCI, even though it's at a 97 volatility, it's below its 52-week average, historical average. So these are looking at stocks that are technology stocks in the S&P 500. Let's say we wanted to create our own, and we have a watch list. You could create a watch list, and if you create a watch list, you will be able to access it from here. So let's look at a watch list. I'm going to pick a simple one, ETF broad base. So this watch list just looks at the largest ETFs that are like market ETFs, right? Broad based, not sector based. Let's reload that, and we'll see. There's I have 4 of them in here. IWM, QQQ, so Russell 2000, NASDAQ 100, SPY, S&P 500, and DIA, Dow Jones. So that's what I'm comparing. What about these ETFs what are they similar? They're broad-based, right? That if the entire market moves up or down, or if there's a lot of volatility, they have some correlation there. So here we could see that relative to its 52-week average, IWM, even though it trades at a higher volatility, right? Because it's the Russell 2000. It's closer, the implied volatility is closer to its 52-week average than some of these other ETFs, right, that trade at a lower implied volatility. You have here SPY, implied volatility is 13.8. The historical volatility of SPY is 12.4, right? So you got 1.4 clicks higher. QQQ is above. So even though they're all above, you could see how far away they are relative to its 52-week average. If we wanted just to see on the day, did they diverge? Did some go up? Did some go down? Did they all go up? Did they all go down? So let's see what happened on the day. So we're going to compare implied volatility versus previous close, recalc, and they were all down. So they all moved kind of in sync. There was no divergence there. Implied volatility was lower in all 4 ETFs on the day. And you could see by how much. So I'm going to stop right there, Will, but that's a quick demonstration of a visual tool to analyze implied volatility levels.
That was great, D. Thanks so much. Thanks for the questions early on, and I got those over to D. If you're on the East Coast, well, I guess most of the country is getting some sort of snow today. It looks like it's coming down. I don't know how it is in Philly for you, D, but it's snowing hard out here. So everyone have a good, safe day, safe trading day, good start to the week. Thanks so much, D.
Yep. Thanks, everyone. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
Trade in peace, chameleons.